Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get this opportunity indeed. But before that, let's have a look at what the markets are up to. So Cheryl, we are off today's highest point, but nevertheless still holding on to the greens, as well as broader markets are supportive too.
Absolutely. A very good morning to you, Shrishti. If you look at it, we are sub that 22,000 mark. We actually had surpassed that level on an intraday basis, as you can see it on your screen. But now we are actually inching towards the day's lowest point, about 44 odd points trading higher for the Nifty, while Nifty Bank is actually seeing a mild bit of outperformance when you compare it to the benchmark indices, with 0.3% uptick as we speak, with the advance decline ratio for now tilted in the favor of the advances. Let's take a look at the list of the gainers and the losers in trade today. Then you have HDFC Life that's ruling the charts with 3% uptick coming in for that particular counter. You have SBI lending support, Britannia, Axis Bank, Coal India are the other set of gainers. Actually, it's very crucial to know that Britannia has actually reversed sharply from the day's lowest point. It was actually hovering around the negative mark. Now it's trading higher by about 1.5% or so. You have Infosys on the flip side that is seeing subdued trading moves, 1.6% downtick coming for Infosys, Power Grid, IndusInd Bank, ICICI Bank are the other set of losers in trade today. Talking about the sectoral indices then, and IT index is the top sectoral loser with down to about 0.7%. Auto also taking it a bit easy. IT also is reacting to Cognizant's numbers that came in overnight as well. So not too enthused by that particular number. But on the flip side, you have Realty, PSU banks, metals, all of them seeing good strength in trade today. So that's the way how the markets are looking like at this point in time. Shrishti, not doing much when it comes to the benchmark indices, but yes, sectoral front, Realty and PSU bank definitely charging ahead.
But other than that, Cheryl, strong IPO action is also what we are witnessing, because 3 companies are set to open for the subscription. Which are the companies and what are the other details on the IPO front? Sharad is joining us to give us all those details. Take it away, Sharad.
Well, yes, 3 important IPOs coming in, and roughly they'll be mopping up more than 1,500 crore rupees this week. And importantly, Rashi Peripherals yesterday, they got in 180 crores from anchor investors, and 2 important names coming in. First is the Madhusudan Kela's family office and also FI White Oak Capital. Now the IPO price band ranges between 295 to 311 rupees per share. IPO size is roughly 600 crore rupees. 2 other banks are also there in the offing in the IPO space. Jana Small Finance Bank, they raised 167 crore from anchor investors, and the names include Citigroup as well. And if you look at the IPO price band, that comes in the range of between 393 to 414 rupees, IPO size at 570 crore. And lastly, Capital Small Finance Bank roughly raised 160 crore rupees. White Oak Capital and Nippon Life Mutual Fund are the important anchor investors participating in this IPO, and the IPO price band is 445 to 468 with the size of almost 523 odd crore rupees. Lastly, also there is a company, APJ Surendra Park, Calcutta-based group of hospitality companies, with the day 3 of the subscription will be there today. As of the second day, if you look at it, the numbers are coming at almost 6.2 times of the subscription rates.
Thank you so much for that, actually, Sharad, for actually outlining which are the IPOs that are slated to open today or that have opened today, and which is the one that is actually closing today. But let's get on board Sneha Poddar to get her views in particular of what she makes of this, the companies that are actually opening up for IPO, as well as we have Kunal joining us. But we will talk about markets with Kunal and not the IPO market. Coming to you, Sneha, then you have 3 of them opening today, and out of those 3, most of them have actually marquee investors actually invested in these counters. Out of the 3 that are opening today, which one do you think stands out and why?
Okay, a very good morning. So according to me, APJ would stand out because it has a strong brand name, and though it's a Calcutta-based company, but then it has a strong pan-India presence with various hotels under different brands. It also has a food and beverage segment, and it runs it under the brand Flurries, which provides it better margins and a little more resilience compared to the cyclicality nature of the hospitality business. So we really like, and especially like given
वो
the
PSU
boom that
कोटक वाला
given the boom that we are seeing in the hospitality segment post the COVID, so the trend still continues to be quite robust, and the travel and tourism segment doesn't seem to be anywhere near the end of the cycle. So the overall the segment is doing well, and APJ with its good brand presence and with a strong presence even in the F&B segment should do well. The IPO is priced in line with the peers. However, post the fund raise, the debt would reduce drastically for the company, and even the working capital cycle would improve. So that should actually boost the earnings a lot for the company. So, the given the valuations and everything, we believe APJ stands out best among the three that we are seeing.
Thank you so much, Sneha, for giving us your take on the IPO market. But Kunal, talking about the benchmark indices, what's your view coming in on that? Because we did hit that 22,000 mark, but we are sub of those levels. So what's the view, keeping expiry in view as well? And also today, very interestingly, Kota came out with a note where they say that the private is pricey, where the public is priceless. But this is hard for them to actually digest this fact, and they are also saying that there is a risk in the PSU basket. But for today, once again, all these public sector banks are seen to be buzzing, from the likes of SBI, Canara Bank. How well placed are they at this point in time, and would you still go for the public sector enterprises?
Well, good morning first of all. I think these are interesting junctures of the market, something which we have not witnessed over the last decade or so, that the PSU stocks are outperforming how in the last few quarters compared to the private sector names. Now, of course, there's bound to be a time when these stocks and sectors would probably get overbought. I believe that we are nearing that slight overbought territory for these stocks, but that would just be more of a temporary aberration into the structural uptrend which you're seeing into these PSU names. So my sense is that over the next few months, we could probably see the many of the stocks which have run up exceedingly high get into their own phase of consolidation. Some of them have already started to get into a correction by a margin of 8-10% odd so far. So I think one has to try and take advantage of that correction for the PSU names. But I think the near-term trend looks to be a slight bit overbought for these stocks, and would wait out for a correction for many of these stocks to get a re-entry point into these names. If in case these stocks come back to their respective, say, 20-day moving averages, etc., that could be a good starting point for someone who's missed out on the rally earlier and is looking to buy or accumulate further.
All right, so that's the view in this particular domain. And also, Kota Kosa has come up with a note, and they've exactly said similar views or echo similar views of that of Kunal. But on that note, viewers, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking all of the stock-related queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen. We have Sneha Podar as well as Kunal Bothra joining us on the show to answer all of your queries. And the first one coming your way, Kunal, and this one is coming in from Alok. He's written to us from Delhi. There are 3 stocks that he's asking your view on. You can answer how many you want to. SpiceJet, he's bought at a price of around 61. IRB Infra, the buy price is 50. And Bank of Maharashtra, the buy price is 50. So he wants to know whether he can expect some more returns in the short term in these counters, or what sort of a strategy should he adopt? Should he book out profits?
See, SpiceJet, the last few weeks of price recovery and the uptrend, I think has gotten the stock into a bit of an overbought or a stretch territory. I would probably prefer that if you can move up your capital from here towards Interglobe Aviation. That's a far more stable stock, performing name, consistent chart by itself. So that's a much more better stock. Out of the other 2 names that you mentioned, Bank of Maharashtra as well as IRB Infra, both of them are exceptionally strong charts. My only concern with these charts is the slight overbought nature of indicators on the short-term time frame, which means there could be a possibility that from here on till the next, say, 3 months or so, there could be an odd phase of a 10, 15, 20% correction which could happen into these stocks. But I think if you are okay to digest that kind of a minor volatility for the stock prices and hold on to it for say the next 1 year, 2 year plus kind of a time horizon, then hold is what I would recommend. If not, then maybe look to buy these stocks on phases of correction and then sell it whenever the stocks get into any further for a rally mode.
Okay, the next Next query is coming in from Mohit Vasudev. He's writing to us from Mumbai and he's written to us for the first time. He has queries on two counters. One is RVNL, the other one being LIC. RVNL, the buy price is around 165.8 rupees per share. He bought around 50 shares of that particular counter, while LIC, he has about 15 shares which he got allotted during the IPO time, so at a price in excess of about 900 rupees per share. He wants to know what should he do with these counters, Sneha. He wants to stay invested in the long term, but do you think he should look to book out some profits right now or stay put with it?
Okay, RVNL, I would suggest to book out partial profit, though the long-term picture remains quite bright for in fact, all the railway stocks and especially RVNL, given the kind of order book that the company has built up, the revenue visibility is clearly there. But then the valuations have become a little stretched, so partial profit booking is recommended. LIC, I would suggest to hold on because LIC is launching various new, the products in the upcoming months, and that should actually drive growth for the company. Moreover, its numbers have started improving, and the kind of strategy that the company had adopted a year back. So that is starting to bear fruit. So LIC, I would suggest to hold on because the valuations remains reasonable.
The next one is coming from Sudarshana, writing to us from Bangalore. She has Paytm bought at 920, Zomato at 122 and PB Fintech at 831 rupees per share. Sneha, looking at a portfolio, looks like she's tilted towards this new age tech counters, Paytm, Zomato, PB Fintech. We know what's been happening with Paytm right now. So does it make sense for her to stay put with all of these three counters right now? No doubt Paytm is way off her buy price given the fact that it is going through some troubles right now. But the stock has made decent recovery over the last two trading sessions.
See, Paytm, it would be very difficult to actually take a call because till the solution doesn't really come up and the stock would continue to remain quite volatile. So, Paytm, I mean, it would be better to actually exit at some price recovery. Zomato is definitely a hold from a long-term point of view. The numbers have yet not come in, but very strong numbers are expected, and even in Q3, the recovery in the overall, the improvement in the overall profitability is clearly visible for the company. PB Fintech has already run up, and it has already captured the improvement that has so far been reflected in its numbers. Valuation wise, I'm more comfortable on Zomato. The long-term outlook clearly, points early break even for the company by FY25 itself.
Thank you so much, Sneha, for outlining on all of these three counters. Kunal, coming now next to you, IRCTC, you have Subramaniam, who's writing to us from Navi Mumbai. He bought the stock about 2 or 3 days ago only. So he bought it at around 968 odd rupees. He's saying it's showing a downtrend. Would it be advisable to hold or sell at a loss? He's just invested in the counter. Does it make sense to judge the stock based on 2 or 3 day movement? Should he stay put for some more time?
I think so. There are two parts to it, Cheryl. Of course, on the short-term basis, the stock seems to be into a slight overbought territory. The concern for the chart for IRCTC is because most of the railway stocks have actually gone into an overbought territory. And I think that's where you're seeing a cool-off happening across the board for many of the railway stocks. If you look at the last 1 week, 2 week of price performance for these names. The other concern for IRCTC is that there could be a possibility that the stock may actually look to retest the 900 mark. So even in this last 3-4 weeks of price movement, the stock has been making a pattern of higher lows for itself. But I believe that even with this higher low pattern, there could be a possibility of a retest of the 900 levels before this minor correction ends and the stock gets ready for a breakout on the upside. So it depends on how much quantity you've bought, what size of position you've taken as part of your overall construct of portfolio. But if you can hold on to the stock, even if it crosses or say for example retests the 900 levels, I would believe that that's a good strategy to do that and maybe look to add further if in case the stock corrects sub the 900 levels.
All right, so that's the take coming in on IRCTC. You have Shankar who's writing to us from Delhi and Sneha, he's given a list of stocks, especially in the power and the wind portfolio, and power and energy space. Also, he's given and he wants to know whether it makes sense to enter any of the Inox group companies. That's your Inox Wind Energy, or Inox India, for the matter of fact. And among the energy and the power space, which of the counters do you think stands out the most?
Okay. Among the energy and power space, see, Tata Power is the most is a in terms of risk reward, that's the most favorable company. It has presence in the thermal as well as on the renewable side. Thermal side, the demand continues to be robust given the very huge power demand in the company, both from the household as well as the industrial segment. It also has built a sizable amount of renewable energy and has a huge capex plans on that front, so that the portfolio going ahead becomes a 50-50 kind of a portfolio. So among the and among the smaller names, if the investor wants to look at, he can look at Gensol Engineering, which is on the EPC side of the solar power projects. But on a safer side, Tata Power is the much better bet. Now, with regards to the Inox Group companies, Inox Wind can be looked at because the Inox company India is actually it provides equipment for the it provides equipment for the renewable energy space, which is a booming space, as I mentioned. So and the if you look at the financials, the financials were quite good. Even the Q3 numbers that came out was pretty strong. So overall, net, though the valuations are I mean, India can be considered.
Coming to you, Kunal, Allied Digital, Chandrasekharan has 2,500 shares at an average cost price of around 172 rupees per share. He wants to know whether he should hold on to this for the next 1 year, and what sort of a target should he keep in mind, or should he average out? What's your take?
See, hold on to the stock. I think the last 3 weeks, the stock has seen a sudden and if I can probably call it a rapid correction from 200 to almost 155, 157. So that generally should not happen for a stock which is into a stable uptrend, because these sudden 20% knee-jerk price action for the stock price tend to discourage a lot of traders as well as investors to build fresh positions into these names. Now, ideally, I would suggest that wait out for maybe another week or so. In case if the stock doesn't break, for example, below the 155 mark, which was the previous week low for Allied Digital, then there could be a case that maybe the stock could get into a recovery. But if in case the stock falls below the 155 mark, then I would believe that get ready for a correction of another 10-15% further. So I would suggest hold as of now, but this week's price performance, if it closes below the 155 mark, could probably decipher the near-term trends for Allied Digital.
Alright, but another query is also for you, Kunal. This one is on two auto counters. Madhusudan from Delhi is holding M&M and his average buying price is 1253 rupees. But now he wants to know, will that make sense to make a shift to Tata Motors? And he also has Tata Motors in his portfolio from a price of 440 rupees. So will that be a good strategy?
I think I would probably suggest that you can either stay put with both of these names, but in case if you are looking to switch from M&M, then I think the better alternative could be actually Maruti. That stock is coming out of a breakout for itself. So the stock has been a huge underperformer as compared to a point where M&M, Tata Motors have been rank outperformers from the entire four-wheeler pack. So I would suggest that rather than switching between these two names itself, it's better that you try and include another third name which is ready for a breakout, and that would be Maruti.
This was come from Dr. Uday Singh. He's a senior citizen writing to us from Hyderabad, and he's been actually repeatedly writing to us. Apologies, we couldn't take your query earlier. He has about 3,000 shares of IRB Infra, which he's purchased at 47 rupees per share, 3,000 shares of NHPC at a price of 55 rupees per share. He wants to know what's the long-term prospects for these counters, Sneha, and also at what positions can he look to add further more of these counters. One, do you think stay put with them for the long term? And two, do you think you should add some more of these counters in your portfolio right now?
Okay. Both the counters, he can definitely stay put from the long term point of view. IRB Infra, I would suggest to not add at these levels. Probably let the time correction happen and then later he can add on to IRB. The order book continues to be very robust, and especially the progress of the Ganga Expressway project would keep the profitability very strong for next 2 to 3 years. So IRB is definitely a hold. In case of NHPC, obviously the energy segment itself is benefiting from the long-term investment that the government has chartered out for the entire sector. So the sector would continue to do well, and NHPC is a good name under that sector. So definitely a hold, and he can actually look at the valuations are still comfortable, so he can add at these levels as well.
All right, so that's the take coming in on NHPC. But for this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Back to Buy Now Sell Now show, where we get you answers for all your stock related queries, and taking a quick look on the markets. A sharp fall is what we are witnessing on both the benchmark indices as of now, because Nifty is down about 38 points as of now. And when we started the show half an hour back, the Bank Nifty was also holding a gains of 135 points, but now seen to be trading almost flat. And we also see a red tick coming in on Bank Nifty as well. So both the benchmark indices are seen to be a bit of an under pressure. Will be interesting to see how the second half pans out. But let's get back to all your stock related queries then. And the next question is for you, Kunal. This one is on energy stocks, and a viewer named Venkat Ramani from Bangalore wants to know any of your two top picks from the energy stocks where he can go and invest for 12 to 18 months.
See, again, these stocks are very, very overbought. So I think you'll have to have a very scattered kind of a position sizing, where you'll probably be looking to buy maybe 1/3 of your quantity at current levels, but you'll have to keep a substantial chunk in the weightings if these stocks get into any phase of a correction for themselves. From the high beta pocket, I think Adani Green is something which looks attractive. That's a stock which I think currently is trading at 1800 plus levels, but I think maybe closer to 1600 mark could be a good average price in case if the stock happens to come back to those levels. And I think many of the other names like SW Solar, which has done reasonably well, Webble Solar, that's also another stock which has done exceptionally well. But I would, as I said, that probably buying these stocks on a corrective phase by at least a margin, when these stocks correct by at least a margin of 10% or more, could be a better strategy rather than deploying the entire chunk at current levels.
All right, the next query that I have is actually coming in from Srinivas. He's writing to us from Bangalore. He wants a fundamental view on Indico Remedies. Sneha, he's looking to invest in this counter, but for a period of 1 to 3 years, he's asking whether it's possible for him to make 30% profit.
Okay, Indico Remedy somehow has been posting weak numbers quarter after quarter, so I won't be really comfortable with suggesting Indico Remedies. If he has to really look at pharma space, then Sun Pharma is a much better bet. Both their segment, be it domestic pharma or be it the US side, both the segments are doing really well. The it has got good pipelines on the specialty pharma space, and the overall outlook remains quite good. The numbers also, quarter after quarter, the company has shown improvement in its numbers. So the pain point with regards to US pricing and all that has really subsided and things are improving. So I would suggest from 2 to 3 years perspective, Sun Pharma is a much safer bet.
Right. Moving on, and Sneha, what's your take coming in on ITC? A viewer named Anand from Bangalore is holding 40 shares from a price of 238 rupees. At this point in time, can he make a switch to PSU names like SBI as well as Bank of Baroda after moving out of ITC?
Okay. He can definitely do that because ITC somehow the we saw some sort of moderation in its Q3 numbers, and the stock may continue to consolidate till the time the ITC hotels IPO hits the market. Whereas in SBI and Bob SBI especially has not really participated compared to the mid-size PSU banks, and pose the numbers that we saw recently that got released. So numbers has been quite good. Valuations is really attractive. So I believe SBI is one counter which he can really switch to, because uh, the uh, the stock has really not done, it has not really moved compared to the other PSU banks. So definitely a sharp move can be expected over this, especially post the good numbers posted by the bank.
Okay, Sneha, one more coming actually your way, because this one is coming in from Mr. Sitaram. He's writing to us from Ganesh. He wants a fundamental view, though he's asked this question to Kunal. Let me take this one to you. He wants to invest in a transformer company. He wants to know fundamentally, out of APAR and Voltam, which one is a safer bet for the longer term for him?
PAR would be a much better bet compared to Voltam. Voltam numbers also has not been that good, so the numbers have been disappointing. But if you look at APAR, the journey has been really good for the company. The kind of capex that the company did, so it has really benefited out of it. And going ahead as well, looking at the overall the government capex program and the order book that the company has, so the revenue visibility is clearly over there. Both the counters are good, but I would feel that the risk reward is much favorable in case of APAR compared to Volta.
Another query is for you, Kunal. This one is from Mayank, and he wants to know your take on automotive axles. He's holding 50 shares from a price of close to 2,700, and he's a long-term investor. What to do in this one?
I think you should look to exit the stock in case if it breaches below the 1965 mark for itself. So currently the price is at 2013, 2000 plus. I would suggest keep 1960 approximately as a closing based stop loss on the stock. Whenever it closes below this level, I think it could be a good time for you to exit, because then the stock would probably have retraced a major candlestick support for itself if it closes below the 1960 mark.
All right, this one is for you, Kunal. This one is coming from a senior citizen Korean. He's writing to us from Cochin, and he wants to know about UPL. He has about 150 shares of UPL at an average price of 446 rupees per share. Over the last 2 years, he's been holding on to this counter. Should he continue to hold or exit? And luckily for him, the stock is above his buy price, Kunal. So what should be his strategy now?
Yeah, one of the very few lucky investors where the stock is actually intending to avoid over the last 1 year, specifically from the point when the stock had broken past below the 750 mark, which is the first instance the stock had fallen below the 200-day moving average. In I think the start of 2023. From there on, the stock has almost fallen by another 30% to 40% now, sub the 500 levels. It still looks very weak in terms of trends, and it's very anticipatory that when would the stock form a bottom for itself. Those are just conjectures, because the stock price trend keeps on disappointing and the stock keeps on correcting every now and then. You have to wait out for a point where the stock shows a remarkable change in terms of the volume pattern and a sudden knee-jerk price action on the upside. That could probably determine a major bottom formation for UPL. So the stock would keep on falling. You can continue to hold on to your positions as of now, but whenever the stock gets into a reversal phase on the back of volumes as well as price action, that's the time where you should be looking to adding more for UPL.
All right, moving on, and Sneha, two of the counters that are seen to be buzzing as well as in the news as well, they are Azad Engineering as well as CDSL. Money wants to know, is this the right time to buy any of these names?
Okay, both the counters you can definitely look at. CDSL, I mean, definitely it remains a good play on a structural play on the India's capital market, and with the capital market doing well, CDSL would continue to benefit. The numbers that came out in Q3 was very good. The valuations are pretty comfortable post the consolidation that we have seen over the last few months. And given its market leadership, definitely one can look at CDSL. Azad Engineering, it's a recent IPO, and post the IPO, the stock has really it has done well, and the valuations, however, has become expensive post the sharp run up that we have seen. The space looks very promising because it's a preferred manufacturer of complex forging machinery components, which has got huge demand in the aerospace and the defense side. So the space is good, but the valuation is a little expensive. So probably one can wait a little, and at any correction that we might see in the counter, one can look at entering the stock.
All right, especially talking about Azad Engineering, we had the management today, earlier on in the day, actually on ET Now, where he's expecting a 25% revenue growth actually coming in for next year. But yes, that's the fundamental take coming in from Sneha on Azad Engineering. But coming to you once again, Sneha, we have Deepak Dave, who is a senior citizen. He wants to know whether it makes sense for him to add Ellen Electronics in his portfolio currently. This one also is a relatively recently listed counter.
Okay, LN Electronic, one can look at adding it, but there would be much better names which are available compared to LN. See, basically, these counters, they are very niche companies, and they cater to niche sectors. So the problem is if they are unable to actually get the the required order book, and if the execution is not not executed as per the plans, then the big disappointment comes in and these stocks tank. So these are very small names, so depending upon your risk profile, one should look at entering such companies. Otherwise, it's better to stick with bigger names, and under the electronic manufacturing, I would suggest Canes to be the much better bet, keeping risk reward in mind.
That's the take coming in on LN Electronics. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's take this next one coming in from Shrinu. He's writing to us from Vijayawada, and Piramal Pharma 100 shares at a price of 140 rupees per share. JSW Energy 100 shares at a price of 220 rupees per share. He is expecting a profit of about 10% in the next 3 months for these counters. Kunal, I'm unsure if you'll speak on either of them, given the fact that you'll have limited data on the charts. JSW Infra and Piramal Pharma, not Energy.
So JSW Infra, of course, the charts are limited, and the stock is not doing much. So I would probably look at this as more of a sideways chart. But Piramal Pharma, in fact, has been one of the stocks which I've been tracking very closely, especially from a point when the stock had broken past about the 100 levels. I think that was a turning point for Piramal Pharma. The stock coming back towards, I think, 140, 145 plus mark at one point of time. It's still trading closer to those 140 levels, which means that the trends are far more stronger for this name. So whenever a stock after a breakout or after a rally goes into a patch of consolidation, and the consolidation is still at the higher range of the prices, which means that buyers are still intact and the trend is still strong for the stock. That augurs very well for Piramal Pharma. I would suggest that you can probably keep on holding on to long positions over here. In fact, if possible, look to add further into the stock price, even at current levels, with a potential target of closer to 175 to 180 for a time frame of 9 months plus.
Sorry, Srishti.
Okay, moving on then to the next query. And Sneha, coming to you to have your take on Ashok Leyland. This was a result candidate, and the company did come out with a good set of numbers, but going ahead, they are sounding a bit cautious on the commercial vehicle demand in the short term, and we can see that have impact on the stock price as well. A viewer named, he didn't share his name actually. A viewer named Radhika actually is holding 500 shares at a price of 180 rupees. Do you believe that it could give good returns to her?
Ashok Leyland, definitely, as you mentioned, the results were good, but somehow there's some kind of cautiousness that we are seeing in the commentary. We believe that in near term, probably the stock would continue to consolidate. But the overall the CV cycle is expected to bounce back especially post the elections, once the capex cycle picks up once again. So we believe then the CV volumes would take an uptick, and if one has to play the the CV stock, then Ashok Leyland is one of the good bets to stay put with.
All right, with that, let's kickstart with the rapid fire. Then, Kunal, coming your way, Rajesh Kakkar from Punjab wants to know Biocon. Can he enter Biocon right now?
Yeah, I think you should look to enter Biocon. I think today the results are there for the stock. If that assuming is not a negative surprise, then you should definitely look to buy.
All right, Kunal, what's your take on PTC India? Viewer named Padma Sevirao is holding 100 shares at a price of 148 rupees. Any near-term target of this one?
Looks exceptional on the charts. Would suggest a hold on the stock for a target potentially closer to 280-300.
All right, Sneha, Muni Rajulu wants to know TCPL Packaging, Anantraj and Kalyan Jewelers. Out of these three, which one should he invest in for the long term and for good returns?
Anantraj and Kalyan Jewelers can be looked at from a long-term point of view.
All right, the next query that I have is coming in on Yes Bank. Sneha, any take on this one? Ratnakar is bought 6,000 shares, but her buying price is 16 rupees. Intention is to hold for long term. Any take?
No view on it. Would rather suggest to switch to some mid-size PSU or private bank.
All right, a query that will keep you puzzled, Kunal. Gautam from Mumbai has 5,000 shares of ITC at a price of around 265 rupees per share. Should he exit ITC and look to buy Varun Beverages?
No, I would recommend a hold on ITC.
Okay, Kunal, specifically for you, Abhimanyu has 200 shares of Piramal Enterprise, but her buying price is 1,070 rupees. Good to hold on, or can he make a switch to Adani Green?
Hold on to the stock, possibly buy or add further if it breaks past about 975.
All right, Kunal, we have Vivek who wants to know about HUL. 2,355 is a buy price. He wants to know, is the time correction done for this counter? What should he do?
Not yet. The stock could go into a further time correction, so you can continue to hold on. Don't average.
Okay, Kunal, what's your take coming in on Dhanlakshmi Bank? Ujjwal Chakravarti has bought 4,000 shares and his buying price is 55 rupees. What's the outlook?
Stock can correct towards 38 mark, so look to average further closer to 38 level.
All right, RK has about 2 lakhs that he wants to invest in high risk, high reward sort of space actually. And I will take this one to you, Sneha. Out of HFCL, India Buzz Real Estate, Suzlon, Hoodco, which one should he look to invest in for a period of 2 years? Any two counters?
Suzlon and Hoodco would be a much better bet because they are in these segments where the government focuses there, affordable housing and the energy segment, the renewable energy segment.
All right, viewers, with this, we are completely out of time in this edition of Rapid Fire as well as on the Buy Now Sell Now show. Thank you so much, Kunal and Sneha, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together as well. But don't go anywhere. Markets at noon will take the action.